Hello again traders, Dwayne Shopper here from Drfx, Forex and Trading. Now this is a continuation of the last video where we were analyzing the Euro Japanese Yen as a way of showing you how we go about analyzing currency pairs using the tools of candlestick patterns and signals, trend lines and consolidation boundaries. Now we had left the last video by looking at the candlestick patterns that we now needed to identify on the currency pair. We had identified that the market was in an uptrend and that since we were still above this uptrend line and also above the resistance bounds of this consolidation pattern, we were definitely still in an uptrend. So despite the presence of this bearish engulfing candlestick formation, the strong U-turn here, which is this signal here, we have to give preference to the bullish scenario and wait for bullish signals to tell us that the market is going to continue the current direction until we start to see bearish signals. So the assumption is that once the trend is still in place, once the market is still above the trend line here, we're going to assume that the market is going to continue the bullish movement until we start to see one of three things take place that tell us that the market is going to start a reversal. The first one is that we see a strong candlestick formation. Even though there's a strong U-turn by itself, it is generally not enough to actually start a reversal. Usually reversals are started with stronger signals in the form of strong double tops, ABC signals. These are very common when it comes to trend changes. And in rare cases, tweezer tops. But for the most part, double tops and ABC signals are generally the two types that tell us that the market is about to start a major trend change. So that's the first way. The second way would be the break of a trend line, where the market will have to convincingly break below this area here to then start a downtrend. That definitely tells us that the market is starting a movement in the opposite direction. Third way would be in the form of a false consolidation breakout reversal, where we would need to see this reversal continue and take us below this resistance boundary, which would indicate that the market is at least going to head towards the support boundary and possibly start a breakout below this area here to then continue this trend reversal. So these are the three scenarios that are generally seen when the market is going to start a trend reversal. A strong bearish signal in the form of double tops or ABC signals, breaks of trend lines, or false consolidation breakout reversals. Now what I like to do after I've identified what is taking place on the daily chart is to basically write down on the chart the scenarios that I've assessed, or the overall situation, as well as what is expected and what is needed in terms of market direction. So the first thing that we do is identify the current situation, where, as I said, the market is definitely in a strong uptrend. It is still above the uptrend lines, this inner uptrend line and the outer uptrend line that we drew earlier on. So therefore the bullish scenario is the one that is preferred for the time being. Now despite the fact that we're in an uptrend, it is always possible that the market could start a trend reversal. But the three main ways in which it would need to do so is either stronger bearish signals in the form of double tops or ABC signals, a major trend line break, or a false consolidation breakout reversal. Now that we have identified the current scenario on the daily chart, the next thing to do is to go on the 4-hour chart to determine what is taking place here. Here you can see that the market starts to move sideways, and in so doing it created this consolidation pattern here, with a horizontal boundary horizontal resistance and an angled support boundary. So this is clearly a pennant setup that was broken at the support boundary, and as you can see here, this was broken quite aggressively, and the market is now starting to pull back following this sharp breakout. So what is going to be happening here is that the market could start to pull back for a few days here, and after that takes place, then the daily chart will either give us another bullish signal to continue the bullish movement, or we will see one of these three bearish scenarios play out that lead to a strong trend reversal. So this in a nutshell is how we go about analyzing currency pairs. We identify if the current situation is that of an uptrend or a downtrend. We then draw trend lines and consolidation patterns. We then look for consolidation, or rather candlestick formations, and we determine, based on scenario analysis, what is the expected direction, what is the preferred direction, and we also look at what is possible in terms of the opposing scenario, in terms of what could lead to a trend change that could take us in the opposite direction. So right now, in terms of the euro yen, we have to wait until the market gives us a bullish signal. That is the preferred choice. Otherwise, we're going to first of all wait for an ABC signal or double top formation. If that fails, then we have to wait for a trend line break and or a consolidation false breakout reversal. So that's it for the time being in terms of how we analyze currency markets and the charts. So until next time, take care.